This is Shelley Craft, and welcome to SNNLive. We're coming to you live from the Cambridge House International Toronto Resource Investment Conference 2012, obviously here in Toronto. I'm here with Benj Gallander, Contra the Herd investment letter. He's a speaker, newsletter author, and probably a raconteur, right?
Well, maybe I have a few moments. Yeah.
Welcome to SNNLive.
Pleasure to be here.
Good. Tell me what you do.
Well, we write an investment letter. It's all about contrarian investing. So the companies that I buy from my portfolio have all been around for at least 10 years, and they have gone way down in value over time. So I'm not looking at anything new. I'm not looking at anything exciting. I'm just looking at established companies that are having hard times. And then what I do is I buy into them, and we tell our readers what we bought, the price we paid, our initial sell target, why we like it, and why we don't like it.
We, guys like me, from Wall Street, would call that not necessarily bottom fishing, but I would say looking for fallen angels.
And I would say that's exactly correct. And in two of the best-selling books that I wrote, I outlined the methodologies that we use. And we are bottom fishing. We're trying to find real value companies with excellent balance sheets, low debt, that for whatever reason, be it corporate specific or be it the economy, they have fallen off of people's radar screen and the stock price has gone down.
What gives you the ability to sort through the many companies that exist in that category, but to pick the ones that have an opportunity to return to their former glory?
It's a great question, Shelley. I've been doing it for over 35 years, and it used to be much more difficult to do because I would have to do everything manually. Now with computers we can do fast filters, so what I can do right away is find the companies that fit into our zone and then create a list of those companies. After that I'll watch them for at least 6 months, often 3 or 4 years before I buy them. And by focusing on debt levels, that's absolutely critical. If I'm buying a company with nominal or no debt, I know the bankers won't come calling. If they don't come calling, there's a better chance for the company to recover and to eventually prosper.
And this is in the mining resource exploration sector in total, correct?
No, we're all over the map. We look at different sectors, but out of favor. So for example, in 2009, 2010, I was buying mostly U.S. financial companies. The portfolio I manage has 15 to 25 companies. There's actually only one mining company in it now. Years ago, after something like Bre-X, when the prices in that field came way down, I did a tremendous amount of buying in the commodity sector. Right now, there's not the same opportunities. There are some, but it's not like it was at one point in time.
So what brings you to Cambridge House?
Well, they actually invited me to be a speaker, so I thought that would be great. They ran a first-class organization. I like to see what's going on, so I talked to a lot of the companies that are here. And it's good to be out and in the field because then you get a chance to talk to people. Plus, we get to meet a lot of our subscribers that come to the show, and I get to meet new people who are interested in what we do.
Now, you're a hands-on type of guy. So in terms of focusing on where these companies can go to reach their original glory, because they're older companies, do you use more technical analysis or do you use more fundamental analysis?
Yeah, it's a question we often get. In the books that I've written, it outlines the methodologies that we use. We actually combine a lot of different methods. We use fundamental, we use technical. We love it when there's momentum. We buy when there is not, but often we're buying companies, say, at $5. When they get over $10, more institutions, funds will buy in, that kind of thing. Very, very much analyzing balance sheets and financial ratios. We talk to management, and because we don't buy in right away and because we don't tend to get excited, we have a much better idea where the company has the potential to go, and other information can come out. So I don't want to buy a falling knife, that's for sure.
Question: what size position do you normally take? Do you have to file 5% or 10% holdings, or do you stay below like 4.9?
Yeah, we stay below, although what's happened in the past is when we buy in, because our subscribers buy in, there will be calls from organizations who didn't know of us and find out that it was us behind it, who then say, like, who are you guys? A lot of our subscribers are very, very wealthy people, and they can buy bigger positions than we do, and that hopefully leads them to make a lot more money.
What is your website?
It's www.contratheherd.com, CONTRATHEHEARD.com.
You spelled herd wrong.
Yes, a lot of people get it wrong and they have a little more trouble finding us, but if people even punch my name into Google or something, they'll get a few hits.
Ladies and gentlemen, Benj Gallander, Contra the Herd, HEARD, an investment letter, and he's a speaker at this conference, and he authors a newsletter, and obviously he's a raconteur. We are at the Cambridge House International Toronto Resource Investment Conference 2012. I'm Shelley Kraft. This is SNNLive. Thanks for coming on.
Pleasure, Shelley. Thanks for having me.
Good to have you.